Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. We are coming off a holiday shortened week, a good one at that. Given the fact that we clocked our biggest weekly gain in over 2 years. In fact, the Nifty Bank was up somewhere around 6.5%. For the week, very close to the all-time high of 54,467. Whether or not we cross that level, that will be the million-dollar question. And given the kind of earnings we've seen from HDFC Bank and ICICI Bank, well, one won't be surprised if that really happens today itself. Lots to watch out for. For the Nifty itself, it was a 4.5% gain for the week. It has outperformed all the other global indices. Even if you look at the monthly returns, 1 month return, the Nifty has, or the Indian market has managed to outperform most of their global cues. Lots to watch out for, lots lined up over the next 40-45 minutes. We'll be getting you a big market voice, and helping you around with the kind of strategy one should really adopt in the current environment. And of course, we'll also be talking about all the stocks in news. We'll get your technical check, some stock related queries will also be answered, and we'll also be getting you some recommendations from our technical expert as well. If you have any queries, keep them coming in on a live feed. We will try and get them addressed by our experts. But of course, before we move any further, quickly take a look at the headlines at this hour. US stock futures edged lower after indices clocked another weekly decline. Dow fell over 500 points while the S&P 500 and the Nasdaq ended near the flat line on Thursday. The 10-year yield rose the most in nearly a week. Asian markets are mixed as trade tensions dent sentiment. China, meanwhile, keeps key lending rates steady in a bid to shore up yuan as Trump's tariffs pressure the currency. The GIFT Nifty is indicating a lower start, but I think even in the pre-open, we are seeing some bit of a green tick. In fact, let's see. We just have around 8 minutes to go for the markets to open. Whether or not we manage to open with a green tick or not, that's the key question. But aside of that, crude oil prices fell over 1% after progress in US-Iran talks and Russia-Ukraine truce eased supply concerns. Meanwhile, gold continues to rally to fresh record amid safe haven buying. And lots of earnings to digest today. IT major Infosys missed street estimates while ICICI Bank reported a strong growth in its profit and improvement in asset quality as well. HDFC Bank too reports strong quarter with NIM or margins on total assets at 7-quarter high. And US Vice President J.D. Vance begins a 4-day visit to India today and will hold talks with Prime Minister Modi on the India-US trade deal besides other issues. Well, as I was mentioning, we saw good gains. In fact, it was a holiday shortened week, a 3 trading session week, and we saw great gains coming in. The Nifty Bank, of course, was among the top sectoral gainers, up over 6%. In fact, it saw its biggest weekly gain in nearly 2 years. All the sectoral indices saw gains. Realty also was among the top sectoral performers. But if you look at Thursday's session, so to say, it was a 4th straight day of gains. The Nifty reclaimed 23,800. Key question, since we are heading towards 24,000, can we reclaim that level ahead of the monthly expiry? That's the big question. Nifty Bank, of course, is at 7-month highs. In fact, even the Nifty and Sensex, are at over 3-month highs. Breadth has been fairly good on Thursday as well. It was the NSE advanced decline ratio was at 2:1. HDFC Bank, it was the biggest contributor. In fact, both HDFC Bank and ICICI Bank hit fresh 52-week highs on Thursday. Let's see whether or not they managed to extend those gains on the back of strong earnings. But IT, that will also be in focus given the fact that Infosys has missed revenues. Top line growth, of course. Even if you look at the full year guidance, it was somewhere around 4.5%, but it came at 4.2%. So it has missed guidance. And for FY26, they have guided for 0 to 3%. That's also below expectations. But in the current environment, most brokerages believe that it could be okay as it bakes in all the uncertainties. The put call ratio jumped to 1.17 vis-a-vis 0.98 in the previous session. Taking a look at some of the stocks that were in the F&O ban, the new entrant is Angel One, although it did manage to recoup losses on Thursday after its numbers. Some of the stocks that remain in F&O ban are the likes of Hindustan Copper, Irida, Manappuram Finance, Nalco, and Birlasoft is one stock that has come out of F&O ban. But before I get on board our technical expert for today, let me tell you that foreign investors have turned net buyers and they have injected 8,500 crore rupees in a truncated week. On Thursday itself, they bought shares worth 4,667 crore rupees in the cash market, while domestic institutional investors were net sellers to the tune of 2,000 crore rupees. So yes, FIIs are making a comeback. Whether or not it's a sustainable trend is something that one needs to really delve into. But let me bring on board our guest for today. Joining me is Rajesh Palvia, Senior Vice President, Research Head and Technical and Derivatives at Axis Securities. Rajesh, lovely to have you. We just have 4 minutes to go for the markets to open. Good gains in a truncated week. One would argue whether one should only look at 3 trading session weeks here on. But, do you think we can reclaim 24,000 ahead of the monthly expiry?
Good morning, Nandita. So definitely looking at the overall structure and the kind of recovery which we have witnessed in last couple of weeks, that clearly giving us indication, yes, there is a possibility that we may reclaim this 24,000 level for Nifty in this continuation of this up move. And for Bank Nifty, I think we are going to register a new all-time high very soon. I think maybe in today's session also we can register that new all-time high for Bank Nifty also, because Bank Nifty structure is looking very strong compared to Nifty, and I think here we may see furthermore really in the near-term perspective also. For Nifty also, the major put-based concentration is now placed at 23,500, 600 strikes. So looking at these data, I think the base has already shifted higher and short covering action has been already played out in this market. So we believe that, yes, still Nifty is holding about 23,600, 650 zone. I think there is a target towards 24,000 to 24,200 is likely to be there in the near term perspective. So one should remain on the long side of trade. For Bank Nifty, I think very strong gain in the previous week, and I think looking at overall structure, we believe that 55,000 to 55,200 would be the next target on the higher side. So at this juncture, one should trail stop loss on the higher side towards 53,900 to hold the position, and I think possible target towards 55,000 we may see in the near term perspective.
Okay, 55,000, a possibility on the Nifty Bank index in the near term. But let's quickly get cracking on the banking earnings that came out over the weekend. Of course, HDFC Bank vis-a-vis ICICI Bank, both the stocks are at in fact hit fresh 52-week highs in Thursday's session. Just want to quickly take you through what the numbers look like. For HDFC Bank, 6.5%, almost 7% growth in net profit on a YY basis, 10% uptick in the net interest income. NPAs have cooled off. In fact, asset quality has improved on a quarter-on-quarter basis. Provisions have also come down on a YY basis quite significantly, and NIM on total assets at 3.54% is at a 7-quarter high. The core net interest margin is at 3.46%, and the credit growth has been robust. Credit deposit ratio has declined to 96.5%. CASA ratio also stood at 35% for the quarter, and stock, of course, at all-time highs. Brokerages, have flagged off that the rate cut could be a drag on margins in the near term, but they have, taken note of the strong earnings. For ICICI Bank as well, the numbers are pretty strong. Net profit up 18%, NII up 11%. Here as well, if you look at the asset quality picture, looking quite good. Stock at all-time high. They have, recommended dividend of 11 rupees per share as well. And brokerages also have outperformed calls, and they've also taken note of the fact that, OPEX has come down, and even slippage ratios have improved, although loan growth has been a bit soft. We'll take stock of these two stocks, but let's quickly take a look at what the market, is looking like at the onset. In fact, it's a 100-point uptick on the Nifty as we speak. 23,960 is where we are at, around 23,950, so to say. So yes, strong start despite the fact that global cues are looking fairly muted. But let's talk about the Nifty Bank index. We are at 54,900 as we speak. So it is a fresh all-time high for the Nifty Bank. Rajesh was mentioning 55,000 in the near term. Looks like we are going to cross that or hit that level today itself. So fresh all-time highs for Nifty Bank index. Let's see what ICICI Bank and HDFC Bank are doing. Well, ICICI Bank up 2%, HDFC Bank up 1.5%. Not surprising then that the Nifty Bank index is perched at fresh peak. But looking at the mid cap index, that's also moving in tandem with the benchmarks. So yes, it is a fairly strong start. All round cheer. The advanced decline ratio is almost at 5:1. Let's take a look at what some of the other sectors are doing. Nifty PSU Bank index was also one pocket that did well last week. But right now, as we speak, all the sectors barring the FMCG pack are trading in the green. The IT pack is also up 1.5%. Surprisingly, we'll just take stock of what Infosys is doing. But the Nifty PSU Bank index is also up almost 1% or so. You also have Realty that was among the top sectoral gainers last week. It's up 0.7% today as well. So yes, very strong start. Banks have taken the lead in this leg of the rebound, and that's clearly that's been the trend today. Look at Infosys, it's up 2.5%. One would have thought that after the kind of performance it has seen on the revenue front, we were expecting some bit of cuts, but of course the fact that it has maintained guidance or come out with guidance at 0 to 3% has actually found favor with some brokerages who have maintained the faith in the stock, which is why I think the stock of Infosys is in fact the top Nifty gainer as we speak. Rajesh, what a great start to the week. We have the Nifty Bank index clocking fresh highs. We are past that 55,000 mark on the Bank Nifty. So between an ICICI Bank and HDFC Bank, which one would you choose post numbers? Both are at 52-week highs.
I think both are looking very attractive as both stocks are outperforming and at new all-time high trajectory for both the stocks. And Bank Nifty is clearly outperforming as it's trading at new all-time high trajectory also, and 55,100 is on the screen at this moment. So I think both stock can continue further more upside. I think if I look at the immediate trading perspective, I think HDFC Bank can extend its gain, and I think the way stock has moved up now and sustaining above 1900 mark, I think here we can see a 2000 kind of target on the near term perspective. So that stock can be looked at with stop loss of 1915 should be your positional stop loss, and 2000 would be the next target for HDFC Bank. I think PSU banks are also catching up, and I think SBI can be also looked at from the banking pack. That stock is also now crossed about 200-day moving average, and the way stock is now sustaining above 800 mark, I think SBI can also contribute to this upward momentum in this Bank Nifty, and possible target towards 825 to 830 would be there for SBI also.
Okay, so SBI also looking attractive on the charts, but what about an Infosys? The stock is down 25% on a YTD basis. Numbers came out. At the face of it, it looked like a howler set of numbers, but if you look at the brokerage calls this morning, they have all kept their faith. No major downgrades. They have, in fact, if I talk about HSBC, it has a buy call. Target price although has been cut to 1700 rupees. They've noted that it was a sharp miss on revenues, although FY26 growth guidance is quite optimistic in the current scenario. Street, was estimated at low to midpoint of company's guidance. And of course, aside of that, they have also said that margins are manageable in the near term, and some of them also pointed out that margins are actually a beat. Even in terms of EPS, it has been a beat according to some brokerages. JP Morgan also has an overweight call, target price at 1800. They've said that FY26 guidance is better than what was actually being feared. In fact, amid all the tariff and uncertainty, that was actually flagged by Wipro. Looking at the kind of, stock movement we've seen when it comes to some of these IT names, would you still, stick your neck out and look at some of these large cap names, Infosys, TCS, etc.?
I think it's just in reaction to the earnings. I think still the stock structure is still on the weaker side, though there is some recovery because most of the stocks are already in oversold trajectory, and most of the stocks are able to defend their previous swing lows, as well as the Nifty IT index has also recovered from its recent low sharply. So I think some consolidation action would be there in most of the IT stocks until the previous lows are intact for all these large cap IT stocks. I think if we look at the large cap IT space, I think TCS is looking quite interesting. Since last couple of days, stock is consolidating a very tight range, and I think if it's a sustain above 3200, 3220 kind of level for next couple of days, I think some recovery or some pullback action towards 3350, 3400 we may see in the TCS. So I think TCS is looking promising if we look at the large cap IT space. 3220 should be your stop loss if you're buying stock at current level.
Okay, that's the view then on IT names. But one other stock that is in focus is the stock of Eternal Zomato, so to say. It has said that it will cap its foreign shareholding at 49.5%. Now, based on the recent shareholding pattern, the current shareholding of foreign institutions in Eternal is at 44.88%. Now, the cap on foreign shareholding will impact MSCI weightage, could also lead to FTSE deletion. But analysts are still bullish on the stock. ICICI Securities, in fact, says that Eternal's move would pave the way for the company to gradually move to an owned inventory model, which could aid in adjusted EBITDA margin improving between 100 to 150 basis points in the quick commerce business over the next 1 to 2 years. Now, stock was a top Nifty gainer on Thursday. I just want to see what the stock is doing at the current juncture. But given the fact that it was the top gainer in Thursday's session, although if you look at the YTD performance, it's down somewhere around 22%. I mean, I was just going through some of the brokerage notes, and I think one of them have pegged a target of 375 rupees, as high as 375 on the stock. But at the current levels, how is the stock of Eternal looking to you right now? Would you take a bet on this? And if one is holding, should they add more?
I think stock is still stable on the near term as well as on the short term chart. Strength is there till stock is holding about 218 level. 218 is important level on the downside. Till stock is holding above this, I think trend is likely to exhibit on the bullish side. Once stock crosses about 232, 234 level, I think here we may see some extension of rally towards 240, 245 zone also. So yes, I think our advice would be buy on dips should be your strategy with stop loss of 218 for Eternal.
Buy on dip should be the strategy on an Eternal. Before we take up queries, I want to talk about some of these life insurers as well. HDFC Life reported numbers over the weekend. The numbers were largely in line to slightly below. If you look at the value of new business, that was up somewhere around 11.5%, largely in line. But VNB margin came in at 26.5% vis-a-vis 26.1% on compared to last year. Slightly above estimates, so to say. The stock is up 17% on a YTD basis. If you see the last 3-month performance, it's up 15%. Even SBI Life, for that matter, has seen a good year so far. Any of these life insurance names on the charts, is it looking attractive? Any of them?
So I think we have seen most of the life insurance stocks have done well in last couple of days. And looking at the near-term, short-term structure, most of the stocks are holding strength on the near-term chart. Be it SBI Life, be it HDFC Life, both stock are looking attractive at this juncture. For SBI Life, at this juncture, 1582 is the important level to watch for. If it's sustainable for next couple of days, I think some rally towards 1640, 1650 we may witness in the near term perspective. For HDFC Life, again, looking at the daily as well as on the weekly structure, I think 698 should be your stop loss to hold long position. Once the stock crosses above 6, 718, 720 kind of zone, I think 740, 45 target can be achieved in the near term perspective. So both stock can be buy at the current juncture with the suggested stop losses.
Okay, that's the view on some of these life insurance names. But let's quickly shift our focus to our viewer queries then. I want to first take up this query from Anunay on Indian hotels. He's bought it at 787. He wants to know whether he should book profits and buy on dips, or should I hold and add more? The stock of Indian hotels, if you look at the monthly performance, the stock hasn't really gone anywhere. But over the last 5 days or so, we've seen some bit of traction over the last 5 trading sessions. Your thoughts? He's making some profits here. Should he hold on to it, or should he book some partial profits? What should he do?
So, if the position is purely for trading perspective, those 858, 860 zone is the steep resistance for trading point of view. So, I think in pullback, if you get opportunity around 850 kind of zone, you can book some profit. But if you bought it for the long term perspective, I think overall long term structure is bullish, and buy on dips is the should be the strategy if you are looking at the long term perspective. On the lower side, 800 is the key support area. Once the stock crosses above 860, 65 zone, I think here we may see again stock can continue its new all-time high trajectory, and maybe we may see further higher level towards 950, 1000 kind of level. So for long term, though we are bullish, but for near term perspective, 850 to 860 zone should be used as a buying, selling, profit booking opportunity.
I hope you've taken note of that, Anunay, the levels that Rajesh just mentioned. But let's shift focus to another query then. This one's coming in from Satya CK. Wants to know your thoughts on ABB versus Siemens for fresh longs. ABB saw good traction last week. We had a Motilal Oswal report as well, where they had reiterated their buy call on better growth prospects. Even I think the global company came out with updates on Thursday, and the stock reacted fairly strongly. So between the two names, which one would you prefer now, ABB and Siemens for fresh longs, Rajesh?
I would go with ABB as the sign of reversal from the lower level is evident on this ABB, and looking at the near-term structure, now stock is sustaining about 20-day, 50-day moving average. Even 20-day moving average is crossing 50-day moving average on the high side. So that's a sign of strength on the near-term perspective. I think if its stocks continues to hold above 5350 kind of zone for next couple of days, I think here we may see traction towards 5800, 5900 for ABB. So ABB would be my choice if I compare with ABB and Siemens.
Okay, that's the answer from Rajesh. Hope that answers your query, Satya. The next one's coming in from Pankaj Kajalia. Wants your thoughts on Nestle India. Now, Nestle, on a YTD basis, it has gained in excess of 10.5%. Even in the last 1 month, the stock has been fairly upbeat, 6% kind of gains. But within the consumption pack, how are you viewing a Nestle right now? Chartically, do you see more upside? Perhaps 2500, 2550 kind of levels in the near term?
Yeah, so structure is strong, and stock managed to cross its January 2025 swing high. I think if it continues to trade about 2380 level, I think yes, there is a possibility that we may see 2500 target in the near term to short term perspective. So yes, one can hold the position with a very small stop loss of 2370.
Okay, 2370, that's a strong stop loss for Nestle India. I hope that answers your query. We have a couple of queries on our feed on an HDFC Bank. We've already discussed that, Bhumika. You can go back in the feed and check Rajesh's answer on that. Also, Debu K wants to know your thoughts on Eternal, which we have covered. But any thoughts on the share of Subros? Debu K wants your thoughts on this particular counter. Just opening the stock is up 2.5% at 633 or thereabouts, and the last 5 days it has 5 trading sessions rather, it has seen good 10% kind of gains, but it's still some time away from its 52-week high of 827. Any particular direction that you are spotting on the charts for a Subros?
So, Subros managed to give breakout on the falling trend line on a weekly chart. That's a sign of trend reversal. Though stock has corrected significant from its recent high trajectory. So, looking at the near-term, short-term structure, I think yes, there could be some rally towards 660 to 670 we may witness. So, at this juncture, my advice would be to hold the position with stop loss of 614. Possible target 660, 680 we may see in the short term.
Okay, that's the view then. Hope that answers your query. The next query is on a Voltas. This one's coming in from Pannu Anil. The stock hasn't really seen any great gains, so to say. 1 month returns, if you see, 10% down, 6 months 28%, 29% down. Even on a YTD basis, it has seen a 30% cut. Where do you expect this stock to head? Do you think it is stuck in that downtrend and it will take some time for it to come out of it?
Still, stock is struggling to recover despite the broader market has already shown a good recovery from the low which we have seen in the market. I think some more consolidation or some more weakness would be there in the stock prices for some more couple of weeks. Until the stock not crosses about 1350 or 1400 zone, I think trend is likely to exhibit on the bearish side only for Voltas. Its structure is still weak on the near-term, short-term perspective. So our advice would be sell on rise would be the right strategy to play in this stock. 1350 should be your stop loss. So any pullback should be used as a shorting opportunity in the stock until the stock not able to cross about 1350 on a weekly closing basis.
Okay, that's the view on a Voltas, but a couple of queries coming in on some of these defense names like BEL and data patterns. In fact, two people want to know about Bharat Electronics. One is Naveen, the other one is Geetu Sandesh. In fact, Geetu Sandesh wants to know which is the best buy now, BEL or data patterns. If you look at the charts for data patterns, you'll see strong gains, 15% over the last 5 sessions. Even but on a YTD basis, of course, it's down 23% or so. For BEL, the gains haven't been more, all that pronounced. Although I think on a year-to-date basis, BEL is yielding some bit of positive return. So between the two, would you say data patterns is a better buy, given the fact that it is showing good momentum?
So data pattern and BDL both have recovered, but outperformance is clearly there in BDL. But for risk to reward point of view, there is a very small stop loss if you want to buy from both of these stock. So data pattern has a very small stop loss. 1860 should be your stop loss. If this is stop loss intact for next couple of days, I think possible upward momentum towards 2000 to 2050 we may see in the near term perspective. There is a sign of bottoming out, but again 2000 would be the level. If it crosses those level, then there would be confirmation of bottoming out pattern on the data pattern. But again, for medium to long term perspective, BDL is also looking promising. Here also one can buy and accumulate the stock as the overall structure is looking bullish for a medium term perspective. And I think we believe that, if it's a sustainable 1300, 1320 zone, possible upward target 1600 we may witness in the short to medium term perspective.
Okay, that's about some of these defense names. Just one more query then. We are running out of time. So I would want to take up this query from Hamza Sheikh on a Macrote Developers. The stock has seen good traction over the last 1 week or so. In fact, the entire realty pack was a buzz. But now with the settlement of dispute between the two brothers, the stock was in focus as well. But what would you do with the Macrote? It's at 1250 or so. Still some time away from its 52-week high of 1650.
I think for Macrote developer, the breakout is already there on the weekly chart, falling trendline breakout after the correction. Yes, stock is showing some recovery sign. So at this juncture, 1200 should be your immediate stop loss to hold for positional perspective. If it continues to trade about 1200, I think there is a possibility 1300 to 1350 would be the next target. And if at all 1350 taken out by the stock on the high side, then possible target towards 1400 or 1500 we may see on a short to medium term perspective. So one can look to buy this stock as there is a sign of reversal on a near term perspective.
Okay, that's the view on macro tech. I hope that answers your query. But with that, we've come to the end of the query segment. Rajesh, before I let you go, any recommendations for our viewers?
I think some of the stocks where we are focusing, that is LIC Housing Finance, that stock is looking attractive. 640 to 650 is the near term target for the stock. Keep stop loss towards 595. Another stock that we like is Apollo Tire. Stock is looking attractive, and the way stock has moved up in last couple of weeks, we believe that 475 to 480 would be the next target. Keep your stop loss towards 446. And the third stock that we like is Grasim. Again, here also very strong traction in last couple of weeks. Possible target 2850. So one can buy with stop loss of 2730.
Okay, those are the recommendations coming in from Rajesh. Rajesh, would like to thank you for taking out time and joining in this morning. You had spoken about 55,100 on the Nifty Bank index in the near term, and we've already achieved that. In fact, perched at fresh highs. Always look forward to your advice, and of course, thank you. Thanks a lot for joining in. Look forward to our next conversation as well.
Yeah, thank you.
Well, on that note, we did reclaim that 24,000 mark. In fact, we are perched above that level as we speak, and the Nifty Bank index very close to 55,200. Mid cap index is showing strength up in excess of 1%. The Sensex up 555 points above that 79,000 mark. In fact, even the technology names are participating in the rally. In fact, Infosys, despite weak set of numbers, among top gainers on the index. But on that note, let me also bring on board our next guest for today. Joining me, Siddarth Bhamre, Institutional Research Head at Asit Mehta Investment Intermediates. Sid, always a pleasure chatting with you, and couldn't have been a better day to call you on the show. We are back above that 24,000 mark. My first question is, in this whole trade war, how is India really positioned? With global supply chains being redrawn, where do you think India has an edge and where it's falling short? And is the worst of the tariff-related drawdown behind us, given the fact that we have recouped all of those pre-tariff announcement or post-tariff announcement losses, and we have outperformed most of the global markets as well?
Right. Good morning, Nandita. Thanks again for having me on your show. One thing is there that people will now take Donald Trump less seriously because he has this habit of, moving away from what he speaks. And that was seen initially when he was negotiating with Canada and Mexico. And now we have seen that there's a pause of 90 days, though the base of 10% tariffs is applicable to all. And yes, markets have done really well. Now, one argument which everyone starts when when it comes to global trade is India versus China. Of course, India has tremendous potential, but also one has to realize that the kind of manufacturing capabilities and the capacities, more than capabilities, it is capacities which China has. I think we cannot reach to those levels in near future. But do we have intent to, move in that direction? Absolutely, yes. And this government in last 10, 15 years have done a lot of work to encourage global players to reach out to India. That's one argument where I want to put things straight that it is not necessary that we would replace what China is doing. But yes, a small trickle down effect from China to India can create a large impact on manufacturing spaces in India. And again, because there are a lot of other competing countries where tariff announcements were much higher than India, so there was this argument that India would benefit. So that stands provided those tariff comes, but who wants tariffs at first place? So yes, it is positive. The global trade space looks positive for India. As far as markets are concerned, Nandita, we have seen market rejoicing, but I don't know how long it should last. I'm sorry to say that because if you look at the actual impact of these tremors on dollar index, that has corrected from 110 to 98. And I am being in market since almost 2 decades now. I have seen dollar index move from various levels, but the pace at which it is falling, it's alarming, and we haven't seen any bounce in dollar index from lower levels. At the same time, if you look at gold prices, they have sharply risen more than 15% in very quick session, and we haven't seen rebounds there. So while equity markets have rebound, the two major factors have not shown any changes. So I would suggest people to not get carried away by this bounce back, significant bounce back, and adopt more cautious stock specific approach. I'm not saying that there will be huge correction in market, but then we are seeing volatility. This volatility is here to stay. For half of March or month of March, you saw volatility on the lower side. Now in April, you are seeing volatility on the higher side. I think we again might see lower side volatility. So don't get excited.
Okay, don't get excited. So then, what should one really do? What is the right strategy in such a volatile environment? Most of the experts I have spoken to have pointed out that the era of easy money may be behind us. So should one focus on capital preservation rather than thinking of big gains this year?
Capital protection, then one should do FD and not even talk about the stock market. So if we are in business of stock markets, we should obviously there should always be and capital protection should not be a seasonal strategy. Capital protection should be the strategy around the year. Yes, if you're a compulsive investor or fund managers who have very stringent norms to follow where they can't go on cash levels beyond say 5 or 10%, for them it becomes important where to hide in such kind of markets, and that's the reason you have seen FMCs doing well. Some of the spaces where only domestic consumption is there, those spaces doing well. So I think they'll continue to do well. I think, again, as I mentioned in my previous comment, we will have to go sector specific. Within sectors also, I think stock specific approach should be there. This market is offering good opportunities in some of these spaces, and these spaces have not done category well. So case in point, if you look at banking, if I can talk on banking, Nandita, now for everybody's talking banking making new high, new all-time high, right? But look at what banking sector, and especially because of HDFC Bank, what has happened to this sector in last 2-3 years. This space has underperformed big time. Don't see it from 3 months perspective. So see it from 2-3 years perspective. And that was predominantly because HDFC Bank and HDFC Limited merger was happening, and all the financial ratios of the company went for toss. Now people are rejoicing at a HDFC Bank growth rate of 5%, 6%. HDFC Bank used to grow at 18%, 20%. So the growth rate is not very significant. I don't want to sound very cautious and very bearish on market. What I'm trying to say here is that these up moves can bring in a lot of excitement, and I just want that excitement to be in a controlled fashion. That's what my suggestion would be to your viewers.
Point taken. But given the fact that you've pointed out that the Nifty Bank index, in fact banks rather, have underperformed over the last 2-3 years. If you keep the headline number for the Nifty Bank index aside, would you still see room for more upside in that sense?
Yes, I do see. Banking space doing better than the broader market, and that's very easy right now because again we'll talk on IT. But if you look at the composition of Nifty, apart from banks, the second major space would be IT. And IT, though today index might be doing well, we will not see that movement on the higher side because of the growth rate. That would be probably we can discuss that later. But banking, we are seeing declining interest rate environment. We are seeing that some of the banks, coming to HDFC Bank, reducing his CDR, which is cash to deposit ratio, which has gone to around 110 during time of merger. It has come to 97. And intentionally, HDFC Bank has kept its credit offtake low. And now with CDR coming at much manageable level, and management has said that probably it might reduce further going ahead, we would see that there might be some credit offtake which will be rising from HDFC Bank. ICICI Bank numbers were great, great in the sense in line with street expectations, and that bank would continue to do well. And I am not expecting too much of increase in NIMs as such because term deposits have been higher compared to CASA in banks. So even in declining environment, there might be some margin pressure. Overall, banks are not expensive right now. We have seen these banks trading at multiples of more than 3 times price to adjusted book value, Nandita. Right now, they're trading somewhere around 1.5 to 2. So there is valuation cushion, and they are placed better than other sectors. So you will find more takers in banking space than market at large. And all these fund managers who have compulsion of investing would also, rather than finding FMCG and ITs of the world, will find placing money in banking space as a safer option. So stock performance and outperformance both might continue for banking space for some time to come.
Point taken, Sid. But since you alluded to IT, let's talk about that for a bit. Given the fact that we've all come to the conclusion that growth rates will not be all that great. But IT names have seen quite a bit of correction, but still they are above, they are still some time away from 52-week lows, close to long-term averages. But would you still go for IT names on the back of valuation attraction, or would you say that it's a complete avoid right now?
So I have been, a fan of taking contra calls in IT space, and be it luck or be it timing, I've been on the right side, at least in this space, I would say. But despite being a contra investor in IT, I would still wait. I will not jump into IT so soon. And the single largest point being the growth part which you have seen. We saw Wipro, though Wipro may not be exactly how you should look at IT space, but there has been a degrowth. Infosys is talking about 0 to 3%. Market is rejoicing because it's probably not as bad as they thought. And not that these companies have not shown these kind of guidance. When there have been times when there has been no growth, but that phase has not lasted longer. Valuations were also compelling. At 2021 PE, with zero growth rate, I'm not excited to buy Infosys. Had it been that, this kind of announcement is coming when stock is trading at 17, 16 P, then probably I would say, okay, fine, this might last for 2, 3, 4 quarters. But Infosys is not, it doesn't come at 16, 17 P too often. But 2021 P does come quite often. So I would shy away from, taking too much of exposure in IT right now, despite being contra investor in IT. Or that's how I do. I suggest IT as a contra play. I would still wait because I feel the growth issue would remain for much longer than what it has been, what IT has seen seasonally. And margins, there are not many levers in which companies can increase margin going forward. So in all, I expect further downside in IT. Or even if there is no downside, I'm not expecting any V-shaped recovery. So no point in just parking money if there's no upside.
Sure. Fair point, Sid. But then last question really, which are the pockets that are looking ripe for good returns now, in an era of deglobalization, so to say, which are the domestic focused themes one should really look at? You mentioned that, you have to be sector specific, stock specific, anything that you would like to leave behind for our viewers in terms of plays or themes to watch out for?
FMCG did very well when market was not in good shape, and that's a no-brainer thought. And stocks are also not very expensive, so I think FMCG would continue to do well. I understand stocks have run up substantially from lower levels, so people who have not entered might find it difficult to enter at higher levels. But then, as I mentioned in my opening remark, that market volatility, we are seeing that this volatility would probably change the direction, and we don't know when. And then if you get FMCGs at lower levels, so that is one sector which you can take exposure level. I have been talking about since last 4 5 months about two spaces which we cover very actively, which has nothing to do with export, is paints and insurance. And we have seen that both ICICI Prudential as well as HDFC Life have not disappointed, at large in terms of their numbers. We are seeing HDFC Life today correcting, but we are happy with the kind of AP and the VNB numbers which have come out. Even ICICI Pru is doing pretty well for itself in terms of growth rate, and the product mix is changing, and there's a transition which is taking place. So that is one space, life insurance space, which we are liking, Nandita. At these levels, stock have done well, and we believe they will do further well because last 2 3 years these stocks have not done much. The paint space is the other space which we are liking. Recently, there was, in fact, last week, Kansai Nerolac Global Meet happened, and they have revised their growth rates and margins higher. We are optimistic in Kansai Nerolac, Berger Paints, Asian Paints, which has more to do with domestic consumption. I understand the competition in that space, but that theme of competition reducing sales and impacting margins, that has played out, and now the trajectory is changing on the upward. So these are few names which people can concentrate on if they are very wary of taking exposure in names which have something to do with export, especially in US.
What about the capital market themes? Stocks did see some bit of correction, but look at the likes of BSE, they have staged a good recovery thereafter. Any particular pocket that you will play this theme by, capital market theme?
We are not covering closely, but as we have been in capital markets, we should have a bit of idea about how these things work. So they are purely subject to volumes. Exchange has taken, regulator has made regulatory changes, especially in FNO. And that's the reason some of the broking firms didn't do well last year. But then we are seeing these low-cost broking firms doing a lot of rejigging kind of services. They are doing, many of them getting into now fund management as well in different forms. So I think if you keep evolving, what I have observed in last 20 years, Nandita, is that if you're an intermediate or intermediary, and if you keep evolving with new products which cater to new audiences, I think you would do well. And there are few low-cost booking firms who have done really well. One of the name, I was part of it for 10 years. So that company is doing really well. Exchanges, I think it's purely function of the volumes. BSE, surprisingly, is doing pretty well. I am not very we don't cover it officially, but I feel that company has run too much ahead of its course. I won't be too optimistic from current levels.
All right. With that, I'm afraid, Sid, we are running out of time. Would like to thank you, as always, for taking out time and joining in. And I look forward to more interactions in the future as well.
Thank you. Thank you, Nandita. Always a pleasure to be on your show.
Thank you. Thanks a lot. Well, on that note, looking at the market, we are above that 24,000 mark. Good Monday, so to say. The Nifty Bank Index made an all-time high of 55,212. We are around that 55,200 level. It's an almost 900 or over 900 point kind of rally on the Nifty Bank Index. In fact, most of the sectors are trading in the green. The breadth is extremely strong, tilted in favor of gainers, 3:1. That's the NSE advanced decline ratio, and a mix of banking, technology names when it comes to the top Nifty gainers. Tech Mahindra, IndusInd Bank, SBI, Axis Bank, Trent, Infosys, these are some of the gainers. But on that happy note, we are leaving the leaving you then. Thanks a lot for tuning in and watching morning opening bell. Of course, we'll be back with closing bell at 3:30 p.m. Don't forget to tune in for that. But till then, have a great trading day and of course, stay tuned to Money Control for all your other news and updates. Thank you.